Rarely does the Fed cut when inflation's still perky, when gold is at an all-time high, when silver is at an all-time high, when crypto's at an all-time high, and the equity market's at an all-time high. And so it's a dangerous cut. And when the president's putting a huge amount of pressure on you to cut, it's a dangerous cut.
Novogratz begins by highlighting just how unusual this moment is. Rarely does the Fed cut rates when inflation is still elevated, when gold, silver, crypto, and equities are all at record highs. Typically, rate cuts happen in recessions or deflationary environments, not in moments of broad asset euphoria. To make matters more complex, the president has been applying political pressure on the Fed to ease policy further.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Rarely does the Fed cut when inflation's still perky, when gold is at an all-time high, when silver is at an all-time high, when crypto's at an all-time high, and the equity market's at an all-time high. And so it's a dangerous cut. And when the president's putting a huge amount of pressure on you to cut, it's a dangerous cut. We are having job growth issues, right? The claims numbers are higher. The unemployment rate is still tight, but it's moving up. You know, non-farm payrolls was weaker. And so I would say if I was on the Fed, this would have been a one and wait cut, right? Just to deal with, because you got to make sure inflation doesn't accelerate.
Yeah.
What makes all economic projections brutally hard right now is this AI effect. And it's a really interesting dynamic. If you're running a public company, shareholders want to see that you're using AI to bring efficiency. So I talked to one guy who said, we're cutting 5% just because we got to answer to the,
right. The pressure of people saying,
to the pressure,
yeah.
We're doing it. Like, I'm not sure the AI is helping. And I talked to other people like, oh my God, we're laying off people because of AI. I do know one thing. College kids are having a much harder time getting jobs in fields that they used to.
Entry-level jobs.
Entry-level jobs.
Yeah.
I was told this by a guy who would know that this year's computer science major graduates from Berkeley, only half of them got jobs. Every year in the past 10, 95% of them got jobs. So it was a dramatic shift in, we don't need young coders. And so we're going to have a really interesting time in the next 3 years of trying to predict where macro data goes.
Yeah.
Like, this could be the greatest efficiency boost in all time and inflation could collapse or not. We're supposed to be running 3 to 4% inflation because we've got $35 trillion of debt that we got to quietly inflate away. But when you go to 10, 12, 15, 18, 20, you lose civil society often, right? People can't eat. It literally becomes societal, really, really poisonous.
Yeah.
And that's why the Fed has independence. That's why if you were in Germany, the Bundesbank had this because they had lived it. They had lived Weimar Germany, which look how that turned out. And so I think we're in really dangerous territory. What could be different this time? By far the biggest difference is the fact that the world's largest investor, the world's largest consumer, the world's largest player in any financial markets, the United States. And we've got a Genius Act passed, and we are going to, with all likelihood, by the end of this year, pass a market structure bill, which is going to not just enable, it's going to force all the big giant companies into this market. So, my iPhone, my Apple Pad, there's no stable coins on it now. It would be shocking if within the next few years, Apple doesn't have stable coins.
Yeah.
Right? Or the Samsung phone, or all your different apps. And so we're going to see, I think, a much bigger shift than we've seen in the building of new architecture, which is blockchain based, for the plumbing of the financial markets. I talked about that years ago. Blockchains weren't fast enough and we didn't have a regulatory framework. We're now having a regulatory framework and an SEC chair who said, let's build everything on chain. I was like, excuse me, did he say that? And he said it a few times now. So Paul Atkins said, let's go on chain. I mean, today there was an article about a sandbox. Like they're going to allow DeFi to flourish. And that could change the cycle. It just could. It's such a big story. Look what Hyperliquid did this year, out of nowhere to a monstrous, right? You know, $50 billion company. That deserves to be there because they're doing $1.5 billion, $2 billion of EBITDA a year.
Yeah, that's nuts.
And we never heard of them a year ago.
Yeah.
Right. And so you could see a bigger shift than we're seeing. I think it's going to take a few years, right? You see like Mike Cagney's company who, you know, tokenized HELOCs. You know, are they trading on the right blockchain? Or is there
will you guys do that? I was thinking of your business when I saw that.
We are spending a lot of
tokenized
time.
Credit.
If we're not in tokenized credit in 12 months, someone should kick me in the jaw. We are credit experts. Chris Ferraro, my president, came from a credit background. We have a great credit business now. And so, we are going to be in that part of the space. And it's one of our big initiatives and we're focused on it. Because think about what's going to happen. Stable coins are going to eat away at bank deposits. So if you're a banking regulator, like, we tried to make it, they can only be non-interest bearing. Of course, you're going to hack that. You're going to have a money market fund and a stable coin right next to each other. And they're going to, flip back and forth in the same wallet. All right. So if banks aren't going to give credit out because they're going to have less deposits, who's going to give credit? You're going to have tokenized credit.
Yeah.
You can tokenize money market funds. We're doing one. BlackRock has one, a big one. We're doing one with State Street. You can tokenize private credit. Apollo is doing their funds. You're going to see Fortress and everyone else tokenize their funds. You can every part of the stack you can tokenize. And so all of a sudden, you're going to have your deposits and stablecoin and your credit in the banking system very well could shift on chain. That's why banks have fought this for years.
What happens to the banks?
The smart ones are, you can't be a custodian if you're State Street or Bank of New York and say, we're not going to do crypto custodian because all of a sudden when you tokenize equities, so they're all going to get in the space.
All doing it.
And they're all working like crazy right now to get in space. You're going to see some acquisitions. It's why in some ways the easier business run is the single vertical business. Like if you're a good custodian, there's probably a bid from you from some TradeFi bank just to quickly get going.
Yeah.
But you're going to see every financial institution need wallets. That I don't know how fast this transition happens, if it's a year, if it's 10 years, it's somewhere in between.
Yeah, but it's happening.
Yeah. And it's happening. Why I know it's happening is because we were getting this legislation done.
Once deposits migrate into stablecoins, banks will struggle to fund credit. Who steps in? Tokenized credit markets. Everything from money market funds to private credit and even mortgage-backed securities can be issued on-chain. Major institutions like BlackRock, Apollo, and State Street are already tokenizing assets, and Galaxy itself is working on tokenized credit products. This is not a hypothetical future. It's happening now.
We originally looked at DATs to say, I'm not positive of the longevity of these things. And I've kind of changed my mind on some of that. But I know one thing, I want to be the asset manager. And so Steve Kurz, who runs our asset management business, Jason Urban, they have done an amazing job of getting in front of the DAT users, the DAT builders, and saying, hey, we'll help. We will bring value added in staking, in buying and selling, and doing all the execution, storage, custody for your DAT, taking that off the table and getting paid a fee for it. And these are long-term contracts. And so we've done that for 8 different people, maybe. And we've got more coming. It's a substantial amount of assets. And, and then we did it, of course, for Ford. And the great news about that is when you add it all together, we had an asset management business that, wasn't making, it was doing fine. It was growing, but because we have a heavy cost structure, was in the negative EBITDA, and now it's in the big positive EBITDA.
Yeah.
And that just gives the business so much air and oxygen.
Yeah.
Optionality, if those crypto prices double, your assets double, right? And so that's been wonderful. It's also been a great way for us to connect with these new entrepreneurs, some that we've known, many that we've known in the past, to say, hey, some of these DATs, like BNMR, it's a $10 billion enterprise all of a sudden. And Tom
so
Lee.
if you can manage X percentage of that.
And Tom Lee has Mojo.
Oh, yeah.
SBET, I met with the CEO of SBET. I realized I'd known him for a long time. He came from BlackRock. And we'll do shit with these guys.
Yeah.
And so that piece has been very exciting. And I think it's, Galaxy took a long time to build. And I think our number one asset we built was brand. And that brand was, you can trust us. We broadly know what's going on in the space, and we understand how institutions work. And this year, brand has made us a ton of money. What brand brings you is these opportunistic ideas, gives you fuel to then build the longer term business that scale.
Novogratz makes it clear that Galaxy Digital is not just betting on Bitcoin's price. It's building the picks and shovels for the tokenization era. Custody, asset management, staking, credit services, and institutional execution. What sets Galaxy apart, he argues, is its brand. In an industry plagued by scams, collapses, and regulatory uncertainty, Galaxy has built a reputation as a trusted partner for institutions. That trust has become its most valuable asset, opening doors to long-term contracts with emerging blockchain leaders and legacy giants alike. As crypto prices rise, those contracts and services become exponentially more valuable, providing Galaxy with a scalable, profitable foundation.